The U.S. government's going to have to sacrifice the bond market. And he put a timeline of 6 to 9 months from his vantage point. The government can basically get its 1 or 2% borrowing rate, but the investor can get its 15 to 18%. It's going to be close to $3 trillion just to get the grid up to where it needs to be. So we have an inflationary system that is basically heading towards a deflationary system run by AI with a monetary base unit of Bitcoin. We're going to have bifurcated economic zones where it's going to be Western Hemisphere versus Eastern. If you look at what Saylor's doing, he's developing a Bitcoin yield curve. It seems like this would be the perfect entity to essentially do like a bitbond pilot. Imagine when Wall Street with the deepest capital market starts doing the same thing, structuring it with real estate, similar to what you've been talking about or what Grant Cardone's talking about. The world doesn't have a debt problem. We have a collateral problem. What if ultimately Bitcoin was established to start bringing trust back to governments and we go into kind of an age of abundance? Basically, all marginal costs are driven to zero because of AI and advancements in AI.
Maryland Hodl, the vibration feels off.
Certainly does, doesn't it, Marty?
It does. That's where we were just talking about. I think we start here, the vibration feeling off. Yeah, this is sort of a growing theme. I've seen you tweet about Darkside, who was on the show earlier this summer, tweet about, let's jump into that. This idea of systemic vibrations as a leading indicator for potential turmoil on the horizon.
Yeah, and a lot of the work I've been doing is I'm a listener. So for the last 5 years since I kind of stumbled into this space, I listen. I watch podcasts. I combing Twitter. I'm in spaces listening just to different ideas and seeing where things are breaking down at. And, a couple of the people that I really like to follow as of late, who I think has been pretty much spot on for years, is Luke Gorman, right? And his most recent podcast that he did, basically, he alluded to, from his vantage point, it looks like the system's breaking down and there's going to be a bond revolt, and essentially the U.S. government's going to have to sacrifice the bond market for a variety of different reasons. And he put a timeline of 6 to 9 months from his vantage point, right? You have economic and geopolitical risks that are basically growing in the market, and it's going to hit a head at some point. And then you take Jack Mallers' Monday podcast that he just recently released, right? And he dives into the fact that austerity doesn't work. We're seeing the examples of that in Argentina currently. If you extrapolate further and take that into the United States, like we're seeing a continuation of all these efforts that are basically fruitless. And the shaping that I put out this week was basically that the government, in my opinion, Bitcoin's already won, right? The government is out of options, and that the industrial system that we have grown to basically embrace over the last, since the 1900s, GDP, we have an inflationary system that is basically heading towards a deflationary system run by AI with a monetary base unit of Bitcoin, which in my opinion is the only monetary asset that can work in a system of deflation. So what we're seeing is these systemic fractures that are happening across society, and you can see it even socially, right, with the cultural wars. I think that they're becoming more frequent, which you can essentially equate back to the vibration that you're discussing about. And it's becoming more noticeable by even the everyday individual, right? So I think society as a whole is starting to wake up to the idea that something's wrong. The financial markets certainly are. I mean, correlations are breaking down across the board. Historical norms that have basically been in place for decades, even generations, are no longer holding up. I think we have a potentially a real crisis on our hands. And, I spend a lot of time thinking. I think you have young kids. I have a 3-year-old. And as a father, during this stage, early child development, you start thinking more about what the future is going to hold for your child. So a lot of my work and effort has been basically focused around a transition, right? What is the transition going to look like from an inflationary system to a deflationary system? How do we avoid all the issues with the forward turning? And, and what are the issues like the death and destruction, right? Entering into another World War II scenario, or before that, a Civil War, and before that, the Revolutionary War, right? But now we're at a global scale with different types of weapons, right? That can ultimately end society. So my thought process has been, I look at Bitcoin as a tool for self-sovereignty, but also a tool to be utilized potentially or designed to help us transition through this system. But to your point, the vibrations are getting more violent, and I think they're becoming undeniable by even the average person across the board.
Yeah, I mean, outside of the culture wars and the social incohesion, which seems obvious, I think one sort of anecdotal data point or data points that I've really leaned on over the last 2-3 years specifically are the selfie videos of people sitting in their cars complaining about a myriad of different things, whether it's the grocery bill, health insurance, car insurance, the inability to afford a house in the first place. I mean, those are accelerating, and who knows if they're just sort of attention grabbing things that people are trying to leverage on TikTok to get sympathy or feel like their voice is being heard or get some attention. But I feel like it's very clear that I do think there's signal there, in the sense that people are really feeling the burden of the economic pressure and this gap between the rich and the poor accelerating. But in terms of systemic vibrations, like within the system, what specifically are you looking at? I mean, you mentioned Mahler's earlier this week talking about austerity doesn't work in the context of Argentina. Obviously, the Treasury just opened up a swap line with them for $50 billion to sort of lessen the blow of the austerity that they've implemented throughout the country over the last few years. What else are you looking at?
Well, I think you just highlighted the micro and the macro, right? And again, I go back to what I've been saying is I listen a lot. So, and then I take more of a theoretical approach to being like the system, the money's broken. So the incentive structures are distorted and misaligned across society. I mean, because the money's broken, the average American, it's more difficult also with the regulatory environment to start a new job, right? For the average American, I'm not talking about in the digital economy, where individuals that are resourceful can basically whip up a business in a couple of days and kind of get network effects. But in the real world, it's difficult. And I see that with family members. I see that with friends. And I don't, the rest of society, I spend a lot of time focusing on kind of the convergence of AI and Bitcoin, as I indicated. But we have this amazing tool in front of us, basically with AI, and I use it a lot. I use it a medium for me that has never really been one that I've utilized has been writing, but I use AI for my writing. That's not lost on me. But the importance of that is the fact that I can throw ideas into the system and I can have active conversations with it, and then I can start connecting the dots on various things, right? But if you look across the fabric of society right now, from my perspective, I'm seeing distortions. I can't really put a finger on exactly those distortions, but you kind of see them day in and day out. It doesn't matter where you look. So,
yeah. And to your earlier point about the federal government, the Fed, Treasury, being backed into a corner and really having no other option than to send it on turbo and debase everything, right?
Well, I think we're heading to a wartime economy, right? I mean, the Defense Department basically just changed their name to the War Department. Do I think it's going to lead to kinetic warfare? It could. But I think what we're doing is we're creating that sense of patriotic, Luke talked about it a little bit in his macro podcast that he did. But I think we're heading towards more of a bifurcated world, right? Nobody's buying our debt. Europe's in a very difficult situation. I think they're technically functionally broke. So in order to kind of solve their economic woes, they're going to have to go to war. And that seems to be where they're heading. And that leaves the U.S. in a pretty interesting predicament. So, of course, we have our allies across the world in various countries, but and we'll continue to protect them with those alignments. But I think the U.S. looks to be heading towards a direction where we're going to have bifurcated economic zones, where it's going to be Western Hemisphere versus Eastern. And we're going to have to work together because we're still going to have trade. But I think the U.S. is going to potentially stop meddling with other countries geopolitical-wise and start focusing on cleaning its own house and its own hemisphere. So that's why I see different things happening in Panama to Mexico to Canada to Argentina to now Venezuela. We're adding additional pressure to Brazil. I think what we're doing is trying to clean house in the Western Hemisphere. But these are all part of that vibration, right? Is basically we're seeing movements that haven't historically happened that are happening now, again, with more frequency.
Yeah. And then domestically, look at like the industrial policy that Trump's gone after. I was just pulling it up. Speaking of using AI, just doing some deep research here on the go, but Trump's taken equity positions in semiconductors, energy companies, critical minerals companies, took a golden share, quote unquote, golden share in U.S. Steel under its acquisition by Nippon Steel. So it seems like that
Lithium
push to reindustrialize the homeland is there. And I guess that's my question: is can they actually do it successfully? Like, can the federal government pick the winners and losers in this reindustrialization and manifest a good outcome?
I think if they have a sense of where we're heading, right? If they know that AI is going to be revolutionary, from my perspective, to the degree I think it will be for humanity, I think it's pretty easy. You're just investing up and down the supply chain, right? And trying to control those resources. Now, do I think that's ethical or where the government should be? No. But again, it goes back to the whole idea that we're in a wartime economy, right? And that war is to be first. The war is basically over monetary base layer and kind of the reconfiguration of that, which is going to be a delicate matter. But it's also around securing resources that we need for not just our economy, domestic economy, but also for defense, right? And I don't know how much longer we can go with getting materials from China without a solidified kind of trade agreement, right? And that seems to be up and down with how the administration basically has been kind of conveying that information to the public for several months now. So.
Yeah. Yeah, it's very positive because, I mean, particularly juxtaposed to China, if you look at the head start that they have at the base layer, I would even put this below money, or actually, no, it's right above money, which is energy. Like that's where I could see the big hurdles coming is in the energy sector in terms of just simply not having the grid infrastructure, the transmission infrastructure in place to actually manifest a scalable artificial intelligence boom in the United States.
Agreed. I mean, I think it was, if worked with AI on it, Eric Rice commented on it the other day. I said it was going to be about $2 trillion from my research in public infrastructure investment. It's going to have to happen on behalf of the government. So he corrected me and basically said, actually, if you run the numbers from a different vantage point, it's going to be close to $3 trillion, right? Just to get the grid up to where it needs to be without sacrificing kind of the domestic residential side. So we're talking some really big numbers, right? And we're also talking about having to do it at a very high pace speed, which I don't know if our economy is tooled to do so at this point, right? Again, it kind of plays into the the wartime economy, right? I think there'll end up being mandates that basically say, this is the direction the country we have to go, and it's about survival, right? We have to win this race. So, yeah, I'm not too much of a geopolitical, this is just armchair, but I certainly have some thoughts. But I think it's a global AI race, and we have to win. And I think what we're seeing is the U.S. government basically getting us ready to secure the Western Hemisphere and kind of retool our economy so that we can do that.
Sup, freaks? This was brought to you by our good friends at Obscura. If you've been listening to the show long enough, you know we care deeply about privacy, particularly as you peruse the web. It is important to be using a VPN, and Obscura is our VPN of choice. That is because it is a VPN built by a Bitcoiner for Bitcoiners. It is the first VPN that can't log your activity and outsmarts internet censorship. Obscura VPN works even in the most restrictive Wi-Fi networks where other VPNs simply fail to connect. With server locations across America and the globe, Obscura keeps your internet access unrestricted wherever you are. I've been using it since it launched. I see no problems with speed. I can get on YouTube TV without any problems. It simply works. They can't log. You can pay in Bitcoin. Go to obscura.net. Use the code TFTC25 for 25% off an annual subscription. It's already a good deal, their annual deal. The TFTC25 code gets you 25% more off. Go check it out. Obscura.net. Use the code TFTC25.
Sup, freaks? This rip of TFTC was brought to you by our good friends at Bitkey. Bitkey makes Bitcoin easy to use and hard to lose. It is a hardware wallet that natively embeds into a 2 or 3 multi-sig. You have one key on the hardware wallet, one key on your mobile device, and Block stores a key in the cloud for you. This is an incredible hardware device for your friends and family, or maybe yourself, who have Bitcoin on exchanges and have for a long time, but haven't taken the step to self-custody because they're worried about the complications of setting up a private public key pair, securing that seed phrase, setting up a PIN, setting up a passphrase. Again, Bitkey makes it easy to use, hard to lose. It's the easiest 0 to 1 step, your first step to self-custody. If you have friends and family on the exchanges who haven't moved it off, tell them to pick up a Bitkey. Go to bitkey.world, use the key TFTC20 at checkout for 20% off your order. That's bitkey.world, code TFTC20.
Yeah, I guess this is a good segue into the monetary aspect of it. I mean, transitioning from industrial policy in terms of making sure that we have the physical critical infrastructure in place. Obviously, the U.S. dollar has been the reserve currency of the world. We've used that to our advantage over the last 50 years, specifically 54 years since we ripped the dollar off the gold standard officially in 1971. And obviously the veracity of the U.S. dollar as the reserve currency is coming into question as we've gone into 37, almost $38 trillion of debt. I think I saw yesterday that we added 60 billion in a couple of days earlier this week to the deficit. And there's sort of two things at play. You have that physical industrial policy, and then it seems very clear if you have more than 2 brain cells, just looking at what the priorities were the first 9 months of this administration, that really rejiggering the monetary protocol and monetary system that we've leveraged for years is a very high priority.
It's actively breaking down, right? And we can see that in the bond offerings. We can see it by them moving duration from the long end to the front end, right? And the Set coming in and essentially continuing Yellen's strategy, right? And I think it's because they're out of options. On top of that, you can see it from Jay Powell, right? The market's reaction to his 50 basis point increase last year, whether you agree with it or not, the bond market moved in the wrong direction, right? His most recent cut, bond market, basically, it's kind of been flat over the last year, but it basically, again, moved in the wrong direction, right? So I think the Fed has essentially been, in my opinion, my framework has been neutralized. It's not functional anymore to the way that it historically should be. And I'm sure there could be professional economics that would argue differently. But at least from my framework, again, going back to those correlations breaking down, and the systemic vibrations that we're starting to see that Luke was alluding to with being like a kind of a bond revolt and potentially sacrificing the bond market. at expense of kind of saving the system or pivoting to a new system. I think that's essentially the general direction we have to go. We have to come up with other solutions. And I think that we're starting to get, I tend to try to read the tea leaves, at least through my framework, with some of the ideas I'm throwing out there, and not only try to make them logical, but also have them fit in what I'm viewing in the news or through the administration or through ideas that, individuals such as yourself or Jack are basically putting out there. And kind of how I started coming up with some of the theories I'm putting out there now.
Yeah, and I'm just pulling up this Porter Stansberry thread from yesterday. I thought he made a really good point, to your point about the system breaking down and pulling the Fed into it specifically. I think the fact that many of the decisions that are made at the Federal Reserve and the Treasury are based off of completely manipulated economic data, particularly inflation, is really what has backed them into a corner and makes them unable to actually implement policy that could turn things around. Because if you're setting the Fed funds rate using the Taylor rule above what CPI is telling you inflation is, like you're using the wrong metric to base that rate off of.
It's getting tough to be a traditional economist, right? Like, you can't make the arguments like you used to. Like, I mean, somebody came out yesterday and commented, his name's going to escape me. He's on CNBC a lot. Amir. Do you know that?
Amir?
Yeah, well, here's the mustache. He looks like he's maybe Turkish.
Oh, you mean Mohammed Al-Arin?
Correct.
Yeah.
And, he put a post out there as just reforming or strengthening the argument that JP Morgan put out, basically calling Bitcoin the deflation trade, right? Or the debasement trade.
Debasement trade, yeah.
But, he's been a historically very strong, traditional, TradFi type of economist. And even he's starting to change his tune, right? So, yeah, it's, again, going back to the vibrations, people can't ignore it anymore.
Yeah, I'm just going to pull up this Porter thread because I thought it was really good. I read this on my flight back yesterday, but diving into this.
He does some great work.
Yeah, and to your point on Mohammed Al-Aran, like he's been a Bitcoin hater. And it's funny, like he was referencing a JP Morgan sort of like analyst report. I guess they polled their customers at JP Morgan, like, why are you allocating to Bitcoin? And they were relaying that information. And both JP Morgan and Mohammed Al-Aran, who have both been pretty bearish on Bitcoin for well over a decade, sort of had to admit, like, we may not deem it to be the perfect alternative, but many others, our clients, see it that way. And to the point about, like, this is exactly why. It's because whether it's the fact that people explicitly understand this or just intuitively feel it, which I feel like the latter is the case for most people. They just intuit it. But I think this point here about the Fed not being able to make good decisions, like in plain English, he just explained the Taylor rule. It's 2% plus the current inflation rate using official CPI. The Taylor rule prescribes the current 4.75% Fed fund rate. However, if you use actual inflation, the Taylor rule would set short-term rates at 17.5%. So you just have this complete mispricing of risk and money.
Risk and money, correct. Well, I mean, if you want to take it from a Bitcoin lens, I mean, if you look at what Saylor's doing, he's developing a Bitcoin yield curve, right? And right now he's currently trying to figure out and price where his stretch product is, right? Now, granted, you have some nuances with the fact that the market doesn't yet completely understand what he's trying to do or value the collateral appropriately. So there's some perception issues, but he's currently at what, 10.25%, 10.5% on the stretch product. And I think that ultimately is kind of establishing a Bitcoin yield curve where he's establishing the cost of money, right? Where it ultimately should be within the economic framework of where we might be heading to. So, and that plays right into the Taylor rule with trueflation being, upwards of 15%.
Yeah.
So.
And as we're speaking, Bitcoin's running towards 122. And I guess let's get into like this two-part series that you've written so far on stablecoins, bitbonds, Bitcoin, and sort of this silent coup that is going on behind the scenes.
Yeah, so I respect a lot of the work that you and your team do. And I've also give a shout out to Burn the Fed, because he also has a similar type of approach. I love the storytelling aspect that you guys do and how it hits, not only educational, but it hits from an emotional standpoint to people. So what I look to do is kind of replicate that in the writing that I'm doing, which, I set in the parameters to keep it kind of stoic, right? But I want to make it almost storytelling, but trying to tell how we got there. So that's why I started with kind of the prelude and then moved into part one and then part two. I'll be issuing something over the next 2 weeks, specifically on bitbonds, at least for my framework and how I look at it, because I think everybody looks at it a little differently. I really started to kind of connect the idea when Andrew Owens talked about it in DC in December or January this past year. I really started kind of diving into what the implications of this new product was. And as I started, I took the white paper that they developed with Matt Pines and threw it into AI, started having a bunch of conversations about it. And then I just kind of sat on it for a little bit. We moved into kind of the May time frame. And I kind of picked it up and started revisiting it again. And then I heard some rumblings about 21 coming out. And I was like, all right, well, if I'm the US government, I'm not going to be able to essentially issue bonds out of the Treasury because we're going to have political issues. So I kind of connected the dots of being, well, you have 21, you have Cantor Fitzgerald, who's a primary, and then you have SoftBank and Tether. It seems like a pretty interesting union. And I kind of started diving a little deeper into my thoughts and frameworks around that. And I'm like, it seems like this would be the perfect entity to essentially do like a bitbond pilot and kind of bypass any political issues with Congress. And from that, I kind of put out a short tweet, and Dark and Puncher kind of jumped on it, and basically that's where I started the framework of exploring more in depth what the significance of bitbonds would be, not necessarily through a 21 angle, but more from what could it be if the Treasury houses it inside at some point. Ultimately, what would that structure look like? Started kind of playing around with the idea of a sovereign monetary flywheel or a sovereign flywheel throughout the summer. And that's when certain interviews came out, like Tucker Carlson with Richard Werner, and that added a whole nother layer. Then we had the stablecoin bill come out, right? And we started getting a little more insights into what that structure was going to look like, that they were going to be investable for, I think, inside 93-day T-bills, right? And you start overlaying what the set's looking to do by basically moving duration to the front end. And you still see that we have fiscal dominance. You also understand that we have this buildup that has to happen, $2 to $3 trillion that's going to happen for AI. And you see a lot of demand coming to the front end, right? So at which point that started adding a whole nother layer into formating the kind of sovereign flywheel, to which then an idea was populated based off of Richard Werner's work by Dr. Pippa Malmgren. And she basically positioned the Stablecoin Act as a workaround by the Treasury of the Fed. So in her argument, she was stating that effectively by putting issuing a stable coin that's fully reserved, it moves the individual ahead of the banks, kind of in the waterfall effect in case something goes wrong, which I thought was a really interesting concept. So that was kind of, I waited a while for that all to kind of start taking shape. And then I think I had a pretty good basis for which I could really start working on this piece and theory and kind of push into the sovereign flywheel mechanical aspect. Because again, going back to what I was saying earlier, I'm trying to spend a lot of time thinking about what the transition could be and what those levers would be. And that's, once I had the concept down around stable coins, right, and putting the dollar on digital rails and being able to essentially push it out across the world, from a digital standpoint, kind of follow the dollar's brand, basically. The fact that it's kind of the king fiat versus all other fiats throughout the geopolitical landscape, and the fact that you can get around capital controls essentially, because now that you have Starlinks or other systems, it becomes easier. They can stop a good portion of it, but they can't stop it all, right? Technology will always find a way. I started this whole framework that basically the fact that you have a digital dollar and you have the technology to transport it to every mobile phone in the entire world, you're taking it from a macro to a micro from a liquidity standpoint. And there's power in that. And what essentially does that end up like supporting? Well, kind of supports the idea of a Eurodollar 2.0 almost, right? Or a petrodollar 2.0, right? Well, what is that skid? It basically oils the skids for a whole digital asset ecosystem, right? Because it limits, once you have the stable coin in place, right? Basically the friction between stable coins and Bitcoin almost becomes minute. So it's easy to go back and forth. And then I started kind of putting the framework together as, if you look at the administration between the SBR and more importantly around the investments around the Trump family that's making into this ecosystem, and some of the actions with the SEC, especially around this ecosystem. I think it's not just campaign promises. I think it's strategic in nature, right? So at least that's from the lens I'm looking at it from. So when you start viewing it as the administration's making inroads into this, you have strategic alignments with companies around an innovator like Jack Mallers, but you have basically Cantor, right? And Cantor itself is highly integrated into this ecosystem. You have Tether, right, which is basically the base layer right now, liquidity layer for kind of the digital ecosystem. And basically you have SoftBank, which is basically funded our entire technology infrastructure via the carry trade for the last 20 years, right? And they also have their own systemic kind of demographic and debt issues, right? You can start formulating an idea of, all right, how does it all come together and what could that mechanism be? And that's basically where I threw in the next idea, right? Which was, all right, you have the stable coins and you have which is the liquidity layer. And then you have Bitcoin as the neutral reserve asset. Luke Gorman talks a lot about neutral reserve assets and how important they are. And ultimately, that's what the next monetary system is going to be based off of, right? And you could argue that the East is moving more towards gold, right? And there's a lot of reasons for that. But it certainly looks like the West is moving more towards a digital sound money to kind of grease the tracks here, per se. So once I got that concept together, I then kind of looked for because Bitcoin seems to have a lot of positive feedback loops from a monetary perspective. You could also argue it has a lot of ethical feedback loops, but we needed to figure out a way to connect the asset side, the SBR side of the balance sheet, to the debt, right? And bitbonds were the perfect transition point, basically, to help feed that whole system. And then you can start a positive feedback loop, basically using the stable coins as liquidity, right? And one of the important framings also was the fact that the idea that at some point they're going to front load the front end, and ultimately it looks like they're heading towards yield curve control. And stable coins are an easy outlet for or method for them to do that. We're a couple months away from, in my opinion, the administration's gonna basically kind of neuter the Fed, and when that happens, this transition will be a hell of a lot easier.
What's up, freaks? This rip is brought to you by our good friends at Silent. Silent creates everyday Faraday gear that protects your hardware. We're in Bitcoin. We have a lot of hardware that we need to secure. Your wallet emits signals that can leave you vulnerable. You want to pick up Silent's gear, put your hardware in that. I have a tap signer right here. I got the Silent card holder, replaced my wallet. I was using Ridge Wallet because it's secured against RFID signal jacking. Silent, the card holder, does the same thing. It's much sleeker, fits in my pocket much easier. I also have the Faraday phone sleeve, which you can put a hardware wallet in. We're actually using it for our keys at the house too. There's been a lot of robberies. They have essential Faraday slings, Faraday backpacks. It's a Bitcoin company. They're running on a Bitcoin standard. They have a Bitcoin Treasury. They accept Bitcoin via Strike. So go to slnt.com/TFTC to get 15% off anything, or simply just use the code TFTC when shopping at slnt.com. Patented technology, special operations approved. It has free shipping as well. So go check it out.
What's up, freaks? Bitcoin's market cycles tend to follow the same old pattern: parabolic spikes, brutal crashes. This time is measurably different. The Bitcoin check from Unchained and Check on Chain shows how the 2023 to 2025 cycle has permanently reshaped Bitcoin's market structure. Inside, you'll find why volatility has collapsed, why ETFs have anchored new 5- and 6-figure price floors, and why long-term hodlers remain firmly in control. Download now, and you'll also get access to the online event featuring James Check. Bitcoin has crossed the Rubicon. Get the report at unchained.com/TFTC. That's unchained.com/TFTC.
I was going to say because we backed Andrew in battery finance from 1031 years ago. And I think the thing, you're talking about like bitbonds and at the macro level, but at the micro level too, it's one thing that we sort of recognized many years ago when we first backed battery, is that you have this ability to manufacture the soft landing that Janet Yellen and many others talked about years ago, but via Bitcoin in structured credit. And so in the example of battery, you have Bitcoin sitting in a structure with another asset, typically real estate, and you sort of de-risk that credit structure because you're not as worried about the debasement of the currency and your fixed income not being worth much because it's going to be compensated for in the value creation that Bitcoin recognizes over the course and the duration of that loan. So you sort of have the de-risking of this private credit product, and I think what you're describing is the mechanisms of how it will work at the federal level.
Yeah. So what happens? The critical point that I finally ended at was the fact that by putting the neutral reserve asset that's backed by absolute scarcity on the balance sheet, and then harnessing the volatility of that asset to help restructure the debt through bitbonds, right? Through volatility harvesting, ultimately causes this self-reinforcing, right? Because the important part is when I was going through it with AI and the revolution, what is Saylor's issue? Saylor's issue right now, at least the arguments that were being made, he's basically using the ATM ultimately to basically pay the interest on his preferreds, right? Whether you call that an issue or not, I mean, there's a perception there. I think he gave a great answer 2 weeks ago as to what his solution was for that. But it got me thinking, like, well, what happens? The U.S. government doesn't have that issue because the bitbonds are going to be U.S. denominated, right? So ultimately, you could essentially print the coupon for the Bitcoin volatility, the monetization of the Bitcoin volatility associated with the bitbonds, and basically keep the Bitcoin permanently in the strategic reserve, right? And once you do that, and you continue to restructure, now granted, over time, the market is probably going to require some sort of Bitcoin kind of payout. But until that moment happens, you basically can start this engine that allows you to basically start really ramping up by using the scarcity of the Bitcoin on the SVR and basically locking the Bitcoin away forever at an infinite duration, because you'd never have to monetize it. Now, I think there's going to be other structures that come up similar to what you're talking about. I think if the U.S. government would ever single, even if they did it through kind of a 21 as a pilot program, that this is potentially happening, it signals that Bitcoin's essentially pristine collateral, right? And once that perception happens, there's going to be a rush to basically structure Bitcoin and harvest its volatility in every conceivable method that Wall Street has, just because you're basically rebasing, from the U.S. government's perspective, you're rebasing its fiat liabilities against absolute scarcity, right? While keeping the scarce asset on your balance sheet, right? In a bubble that works well for the U.S. government, but imagine when Wall Street with the deepest capital market starts doing the same thing, and structuring it into portfolio products, or structuring it into corporate debt, or structuring it with real estate, similar to what you've been talking about, or what Grant Cardone's talking about, right? At these increasingly longer durations, it becomes a superpower, right? Like, that's when we hit essentially kind of a reflexive equilibrium. That second portion of the S curve. And I think it comes with when the mindset shifts with investors and the general pop, right, or Wall Street, that this is a superior collateral, pristine collateral that the world's ever seen, right? And I was listening to Peter Dunbar's talk last night on the What Bitcoin Did podcast, and he had a segment in there about bitbonds. And he kind of opened it up, and I like the framing of it. He's like, the world doesn't have a debt problem. We have a collateral problem. And that point resonates because it makes a lot of sense, right? Going back to the vibrations and the distortions, it's an inflationary system. It's run by debt. We need to find base layer collateral, and whether that's gold or Bitcoin, and ultimately Bitcoin will win because it beats gold on every single one of its characteristics, right? It's just a matter of time. And in my opinion, Bitcoin's already won. It's just, how do we leverage it and use it against this absolute scarcity to kind of realign incentives across society?
Yeah. To your point about like the reflexive tipping point, I think what Saylor's doing, if bitbonds ever get out the door, obviously you mentioned 21, like we're at the very beginning stages. And to your point about, it's very clear, it went from implicit to explicit over the course of this year. Like the Trump administration basically wants to neuter the Fed and bring everything in-house. To the Treasury, I think that in and of itself will incite a reflexive tipping point, because you're like, who owns the Fed? The commercial banks, right? And you're sort of cutting them out of the situation, and they're going to have a sink or swim moment where they're almost forced to adopt similar strategies, begin using Bitcoin as pristine collateral. I don't think many people are factoring that in.
I don't think many people are ready for that. But if you look from a regulatory perspective, it's certainly where we're heading, right? You look at the comments that JP Morgan put out, right, yesterday, the day before. Like, the market's waking up to this. The wave is coming, It's just how fast, once it gets here, what's the exponentiality associated with it. And I think we're going to have ups and downs. I do believe the cycle theory is dead. I think that the market, especially if some of these ideas that we're kind of exploring come to fruition, it is the end game for the inflationary monetary system. And it has to be, because the debt-based system can't operate in a deflationary world that's driven by AI, right? So, the important part, if you looked at the monetary flywheel, the sovereign flywheel, is the structure of a bitbond is, I think you posted something about negative yielding debt. And, I think that you posted something yesterday about that. And what bitbonds do, or anytime you want to incorporate Bitcoin, because all you're doing is you're harvesting the volatility of its annual CAGR, right, into a debt structure, and you're attaching it to a fiat debt structure, right? And you're trying to realign the incentives, right? That's all we're doing. Is in the case of a bitbond, the U.S. government can borrow at 1 or 2%, right? And the investor gets basically the principal protection plus their 1 or 2%. And over the life of the duration, whatever that is, say it's a 10-year, and you're at a 35% CAGR, say it's a 20-80 split, and between fiat and Bitcoin, and say that the split with the U.S. government's a 50-50, right? You're looking at an incentive of anywhere 15 to 18% tax-free back, right, to the investor at the end, right? So now you're starting to get real returns back. So the government can basically get its 1 or 2% borrowing rate, but the investor can get its 15 to 18% return. And that's why I think it's important. And Darkside's discussed this a couple of times about how the cost of money is significantly higher. You alluded to it earlier, right, where it should be from a society standpoint. So I think the way we need to look at this is, if you look at bitbonds and Bitcoin as transitionary tools, it's going to help society basically converge to whatever that natural cost of money is over time, as Bitcoin's volatility on a CAGR perspective decreases as it gets more integrated into society, right? So ultimately, I think the cost of money should be 10%, right, or higher. But how do we get there? And how do we ease society into achieving that without ripping itself apart, right? And I think the mechanisms or ideas behind bitbonds, or the Bitcoin harvest, volatility harvesting mechanisms, is a great way for us to do that, right? Again, rebasing fiat debt against absolute scarcity.
Well, let's dive into that a bit more. From a social cohesion perspective, you think this is one of the only paths to make sure that we get on the other side of this fourth turning, this inflection point, whatever you want to call it, with relatively low conflict, kinetic conflict?
From my perspective, yeah, I do. As to how it plays out into what variations, like how it's introduced into what variations, it's it doesn't have to be the way I've outlined it, right? Various people have various ideas about it, and I think it's generally directionally correct. I received some feedback from Luke Gorman, right? And his feedback was, well, how does this work with the rest of the world, right? What stops this process from hyperinflating the dollar against Bitcoin? And my thought was, well, it's the speed at which you issue the bitbonds. You don't do it all at once, right? And then he came back with, how does this work basically with trade issues, right? Between China and the rest of the world, where we're having deficits and surpluses, right? And we're on the wrong side of that. the coin there? And I can't necessarily answer that question. It goes back to some of the thoughts and work that's been done by Dr. Pippa Malmgren, which talks about the three pillars, and her pillars, it's basically controlling the money, having technology, and having control of kind of the power, to your point that you said earlier. And this is speculation on my part, but I ultimately think that potentially the U.S. government has superior military advantage. And I think there's probably stuff that we don't realize that they have. In one of my posts this week, I was kind of feeling feisty. I was joking. We were throwing a toss back to Independence Day. Like, you don't think a toilet seat costs $20,000, do you? Right? And how many audits do we continue to fail? If that's the case, well, we know nuclear war is not an option because of mutual assured destruction, right? But we have to work together from an economic, because demographics are bad even with our trading partners, whether it's on the front end of the demographic curve or the back end, right? So everybody's kind of in this really crappy economic situation across the world. And people, of course, will argue with that. But I think there's incentive to work together. But even if there wasn't, and there was an issue from a kinetic standpoint, I do think that the U.S. has extra cards in its back pocket that basically could help keep the military or kinetic issues across the world at a minimum. And if that's the case, I think the give here is basically going back to the bifurcation of kind of the world, East versus West. I think the U.S. is going to pull back and really focus at home, kind of retooling its supply chains here on the Western Hemisphere, and let the East kind of handle itself, right? So again, that's kind of where I see it from a geopolitical, economic. But as part of that, we're going to have to figure out how to kind of retool our monetary system, and Bitcoin and these volatility harvesting mechanisms are the only way that we can realign incentives. And I think that having that military might and economic kind of requirement to kind of work together because of demographics, everybody's going to basically play ball. So, and maybe that's just hopium on my part, but at least that's the framework I've been kind of working with lately.
No, I completely. I don't like the doom. I like to be an optimist, and especially when you consider the fact that we have the tools at our fingertips. It just takes the will and the drive to actually pick them up and use them. And if you view it from that perspective, things are actually incredibly optimistic and exciting, because you sort of have this opportunity to rewire the global economy, and that's a massive opportunity. And I think that's when you position Bitcoin, I think that's something I could do better. Everybody could do better, is really just painting that incredibly optimistic. Like, we have an opportunity as a generation, as people living on this planet at this particular point in time, to really change the trajectory of where our species goes in the long run.
But it's how we realign the incentive structure to help us transition, right? And the incentives need to gradually come back to a market rate. And it really comes down to this, basically structuring Bitcoin into a variety of different products that's going to get us there. One being the sovereign debt.
Well, I guess that's the question. Like, is it dependent on us doing that, or is that almost inevitable because more and more people are realizing that Bitcoin is just the natural hurdle rate? And
I think it's an acceleration mechanism, right? Like, we could use it. Ultimately, Bitcoin's going to win, and we're going to end up in that system. Naturally, individuals and governments are going to gravitate towards it, and it'll fix it over time, right? Or we could use a system that I kind of outlined in the paper that basically would help accelerate it, right? Question is, what are the the fractures, the vibrations are becoming more violent and more frequent. So how much time do we actually have? I mean, how much time do we actually have before the deflationary forces of AI and its impact on labor, right? Not just blue collar, which is still down the road with robotics and the embodiment of AI, but more so with white collars, what we're currently seeing, or college entrants basically getting decimated and not being able to find work because productivity is increasing kind of at the mid to upper level management levels, so they don't need to backfill. I think, yeah, if we have 20, 30 years, Bitcoin's going to do it. I don't know if we have that much time because of the vibrations and, where AI is going to put us in the next 5 to 10 years would be my counter argument.
So what would you tell individuals listening to this? Like, how can they help accelerate? How should they position themselves to prepare for either path, the path where we decide to actually accelerate, or we strategically mess up or don't recognize the gravity of the situation and go full bore?
The beauty is, and I put Bitcoin in 2 distinct categories, right? It's one for the sovereign individual, bring sovereignty back to the individual. So just buy Bitcoin. That's all you have to do in either path, right? And then the second is potentially my framing, which is it can be used as a tool to kind of transition us into the next system, right? So in either situation, it's just going to be, as an individual, just buy Bitcoin, right? Now, as to whether I'm hopeful that the U.S. government is, to me, this is the ideas that I have is something that Saylor would have done kind of in his sleep over a weekend, basically playing with AI. He could have figured all this out. And I'm hopeful that maybe the U.S. government has this type of plan or functionality or thought process in play. And if you read the tea leaves, it certainly looks like it could. Not saying it's still highly speculative. But if they don't, they haven't been thinking from this standpoint. It's either this or some variation of this, notwithstanding any considerations you have to take into the global geoeconomic, political, trade type of thought processes that could be leveraged at some point to help, again, realign incentives across the board. So, one last thing is I was talking, I had a conference call with Jeff Booth just to kind of talk through it at a high level. And at the end of it, there was another idea I've been kind of playing with a little bit, is what if, because Jeff's commented multiple times, like it's very difficult for humans to look through a paradigm shift and see what it looks like on the other side or be able to understand the changes, right? What if Bitcoin, going back to that whole tool idea, right, where it's a tool to help us realign incentives to get through a transition? What if we talked earlier about Bitcoin having monetary feedback loops, and I alluded to that it also has ethical feedback loops, right? It's a system built on trust and transparency. So what if ultimately Bitcoin was established not only to give us a base layer for the sovereign individual, but to also infiltrate governments and the broken incentive structures within our own governments to start bringing trust back to governments and realigning their incentives from serving themselves to serving the people, right? And ultimately, if governments do use Bitcoin in a method that I've described, they're going to have a large pile of Bitcoin, right? So what if once we get through this and we go into kind of an age of abundance where basically all marginal costs are driven to zero because of AI and advancements in AI, where we value things differently, not from a monetary perspective, but the true value comes in trust. What if Bitcoin reordinates society around trust? And that's its true value. And when you get to a world of AI, the monetary value is basically, there's no need for it anymore, right? And granted, that's definitely opium and speculation, but I think it's a different framework to start looking at or explore. Is basically the end game might not be the monetary value that Bitcoin holds, but the fact that it reinstitutes and re-injects trust into society, right? So that we can live freely in an age of abundance.
Yeah. I don't think they're mutually exclusive either, right?
Yeah.
That's, Bitcoin's been described as this trust machine, right? I remember I haven't described it this way in a while, but when I was first getting into Bitcoin, trying to explain it to people, like going back to like the original form of accounting where people would have to go to like Town Square and somebody would literally have the ledger and you'd go with your trading partner being like, okay, he's giving me apples, move money from my point in the ledger to his. Like you can view Bitcoin as just like this massive beam of light that anybody can just like anchor into and know that it actually, like you just have complete faith in it. You can trust it because, you know, the consensus rules are open source and the incentives of the system are such that it's really hard to corrupt. And just being able to trust that, that monetary system, which is the most important tool that we use in money, you naturally have those second, third order ripple effects throughout not only the economy, but interpersonal relationships and stuff like that. It's fascinating. That's the frustrating thing. So I've been in Bitcoin for over a decade now. It's like, how do other people not realize this? And to your point about Jeff-based comments about most people not being able to recognize that they're going through a paradigm shift, not only not recognize it, but not understanding how to operate while we're going through it. It's frustrating. Then obviously you have like the culture war stuff. It seems like the spectrum of political volatility is as wide as it's ever been. It's hitting from all angles, whether it's like Israel, Palestine, Ukraine, Russia, trans stuff here in the country, guns rights. Like it just seems like they're racial division. They're hitting it from all angles right now.
Yeah, and I remain hopeful. I know you interviewed Jordy Visser over the summer, correct?
Mm-hmm.
I remember I was up at, I got a data myself and I went to Gettysburg and I was just kind of walking around listening. And your framing of how you did, just, Jordy spends a lot of time. I mean, he's a big Bitcoin proponent, but he's also very focused on AI and the transition, right? So, and what that's going to look like. And I loved your framing, you know, and I wrote a piece that basically at the end, it was kind of more of a manuscript for my son and for how I want to kind of raise him. And you guys, towards the end of your discussion, were talking about framing of what it looks like over the next 5, 10, 20 years, bringing us from today kind of into the age of abundance, right? And that, I'd be honest with you, that was kind of a cornerstone for why I wrote the piece and got me thinking. So I appreciate that. It was inspirational. And it just, the world's going to change. There's nothing we can do about it, and nobody's prepared for it, right? If you go out and ask most people, you know, what type of system we operate in, being an inflationary one, right? Nobody can really explain or realize that there's a counter argument that there's also deflationary forces, right? I mean, everybody's heard a little bit about, you know, the price of a TV goes down over time, right? But nobody structurally understands why. And it shows you the degradation of society, where we're no longer teaching our kids what's important and how the world actually works. You know, we're so stuck on these dopamine hits that are related to our phones or the next TikTok, right? And I have a 16-year-old as well. And, you know, it's definitely been an eye-opening experience watching her go through her teenage years and see what she values versus what we valued growing up.
Yeah. No, I mean, it's something I've got three under 6 right now. And it is crazy to think, like, my oldest, he's in kindergarten. He's aware. He knows what Bitcoin is. He has a Bitcoin wallet. And he's starting to ask those questions. Like the last year, it's been like questions in the car. It's like, oh wow, you're beginning to think about this stuff. Like, how do we approach this? And we have, and not only that, but like, how do we make sure that you don't go insane in this world as you were born? Like he was a COVID baby. He was born in early 2020. So like literally born in the middle, what I would deem to be one of the most massive inflection points and points of awakening. Like COVID, I think, was actually the silver lining of COVID was how many people it sort of shook awake in the sense of like, hey, something's really wrong here. It did the opposite too. Like it was the silver lining. It woke up a bunch of people, but it also sent another portion of the population down the road of doubling down on the insanity. And I think that
it certainly woke me up. I mean, my entry came in 2020. So, and it was right in the midst of when gold started breaking down, right before Bitcoin started rising. I think my orange pill was actually Breedlove's letter to Ray Dalio, where he outlined the properties as to why you should invest in Bitcoin based upon Dalio's book Principles. So, and that was the moment I started my journey, right? And it has not stopped. It just continues to get deeper and deeper. And then you add in the secondary layers of what the convergence of AI means. And we're standing in a very interesting moment in history. And I think this is going to be remembered and talked about for generations to come.
Yeah. Yeah, maybe we'll even be able to talk about it for generations because we'll be able to live to 250.
Potentially. Yeah. I mean, there's a thought process that our children might not die, right? Like it's medical, right? It's physiological. So you can solve for that potentially. Now, I don't want to get into the ethical issues around that, but there's a potential that our kids could live as long as they want, God forbid, an accident. We might be able to solve for that, which would be which is an interesting theory to have, right? It has a whole bunch of other second order effects and issues with that. But to your point, living to 280, why is it just 280, right? That could be go off of some of the other thought leaders in the space. We're ultimately converge with machines. I don't know if I want to go that far, but it's not impossible.
No, I don't want to get the chip either. I don't want to become a Borg, a cyborg. But
I think the community appreciates you just the way you are. So I know I certainly do.
Thank you. It's it is I've said it on the podcast recently too. It's like equally unnerving and exhilarating. Because I think the unknown is greater than it's ever been. But the opportunity, on the flip side of that, the opportunity is greater than it's ever been too. That's that was like the last thing I was going to say. Like, I think part of my focus and goal is like you do have these competing forces, particularly on the political spectrum of like people that want to go overt, like democratic socialists. They say, I saw Ramdani, it was on the VO. He's like, I'm not a communist, I'm a democratic socialist. It's like, you're a communist. You're just a step before communism. And so there's a very large portion of the world that wants to go down that direction and tried that failed experiment once again. And then you have people like us who are like, I think have appropriately recognized that central authority has corrupted everything and we need to get back to sort of emergent properties and distributed decentralized markets. And I think that can fix it. And I think that's going to be, speaking of like threading the needle with bitbonds and recognizing Bitcoin as pristine collateral at the federal level, I think socially too, there's going to be a sort of critical decision point or turn at some point in the next 5 years where it's like, no, we're free market. We're going to the free market direction, not this democratic socialist communist direction.
Yeah, no, I agree. And Preston Pish has argued that it needs to be like a bitbonds needs to be kind of a bottom up approach, And I disagree. Bitcoin's been a bottom-up approach, right? It's grown from nothing to 123, in 13, 14 years. So I think it's come to the point where in order to Trojan horse a system that's been hyper financialized, that it's going to take strong leadership to realize what the asset class is. And it has to be a top-down approach from my perspective. And once it is a top-down approach, because you might have some different thoughts on that, I believe the asset as it stands is, and the network and the protocol is completely capable of taking on immense value, basically being added to it. I think it's capable of doing it now. If you hold that thesis, then Bitcoin's ready for for prime time. And I think administration or government that realizes its value prop and understands what the asset is, especially backed by the absolute undeniable transparency and scarcity, will establish it as pristine collateral. And once they do that, it doesn't stop. Like, it's game over.
Yeah. My perspective is like, it's all good. Do it. Don't wait on any other actor to do it. Just do it. So again, that's why we back Battery. It's like, let's not wait for the government to issue bitbonds. They should, but
yeah,
let's get something in the private market so that they can pave the way. Like, hey, this works in a private credit structure. Like, you can apply it to this. You can definitely apply it to a bitbond. And yeah, I think the most important thing is just develop the agency, the will, and the drive to do what you can do with what's at your fingertips, and hope that you're successful, number one, and then number two, that success sort of inspires others to bring it into what they're doing.
Yeah, I completely agree. And with Battery, or with what Grant Cardone's doing, right, I think there's going to be a lot of solid examples that will help provide some guidance to the powers to be, to help them feel more comfortable, in the coming years, to kind of move forward with some of these ideas around bitbonds. So
yeah, no, and I know that they're very solid Bitcoiners, well placed throughout the administration. I've talked to them, and to the extent that they have ultimate influence over decisions, I don't think it's. They obviously don't have ultimate say, but I think the seeds are being planted. The right seeds are being planted.
Maybe it's just pie in the sky, but if you take the concept I had about 21, one of the original thoughts, you kind of play it out. Not only could it potentially bypass congressional approval and basically establish kind of a pilot program, but it's proof of concept, right? Because if you go out and you do it with $100 billion or $200 billion, which is small in comparison to the U.S. government debt, then ultimately what happens when Congress on either side of the aisle starts to see that, hey, we might actually be able to borrow at 1-2%. This could actually solve our debt issues or financing issues. Not only that, this gives us the mechanism to move front end maturities or duration to the long end, right? Say there's a hiccup because there's a lot of people, including infra, I spend a lot of time in spaces in Bitcoin today, where it looks like we're heading towards yield curve control. It certainly looks like stablecoins could provide the Treasury that mechanism, especially if the Fed has been minimized in its power and scope. Then, if you're not doing it with yield curve control, at some point you're going to need to move duration. And this is going to give the perfect cover mechanism to basically move it out further in the yield curve from where it's currently standing. And But I think it's important that the pilot program itself be established, because if you need to have the pilot in order to get congressional or political buy-in from both sides of the aisle. Again, going back to incentive alignment, right? Even this simple concept, when it's put out in the wild and it starts to show how it operates, it aligns incentives even across political aisles, right? And you've done a lot of work, and the community's done a lot of work on talking to Congress on both sides to basically state that what this asset is and bring everybody to the center to understand it, right? Well, bitbonds are basically a monetary structural proof as well of that, right? That ultimately, I think, again, via a pilot program, whether that's 21 or somebody else, will give us the examples and the results that we need.
Yeah, I completely agree. It was like, it's all happening right now. All going according to the plan. We're running towards 124 right now, nice. 123, 720. And it's funny. I think this year was interesting. I was actually talking about it this week at the 1031 retreat that we were on. This year reminds me a lot of like 2015, 2016, where people were completely unable to recognize. I'm just looking at the chart now. We hit a low of 76,000 in April during the tariff tantrum, but
yep,
we've been hovering in the 100 to 115 range for like 6 months now. And it's like, that is, if you would have told me that in 2017, that in 2025 is where we'd be hanging out, I'd be like, oh, good, Bitcoin's succeeding. Many people
feels like we're being dragged through the mud and tortured in the same time.
That's one thing too. Like Bitcoin is she will humble you, because that's the way it works. She'll bore you to death and then she'll rip like she is today, and then people can't stomach that the boring periods. And it makes sense, because once you see it, you understand, like, oh, this should be a 200, 300, 500 trillion dollar market. It's only at 2.5 trillion right now. Like, why isn't this priced in? And I think it's the nature of just human nature. Like, people move at their own pace.
It's I put out something quick earlier this week, just talking about being Bitcoin based and what that represents, and it plays on the terms humility, right? Because it forces you, Bitcoin forces you, not only is it a lens to look at the world and actually call it bullshit for what it is, right? And actually say, this is real, this is not. When you understand what Bitcoin is, and the incentive alignment, the Bitcoin, the ethical feedback loops. But then when you look at the rest of the world through that lens, you can see how distorted the broken money system has created, whether that's politics or Wall Street, and kind of their ongoings. But that whole process of looking at the world through a Bitcoin lens is a process in humility, right? You really have to question everything you've been told your entire life and take a step back and realize that not necessarily a lie, it's just how society's been misaligned, right, with a certain belief system. And to see that belief system break down and to swallow your pride, first off, to explore what this asset is, but then once you start to really dive deep into seeing how it can change things, it's a humiliate. It's a lesson in humiliation, but it also, like a phoenix, allows you to kind of to rise up and think clearly, and it reestablishes the thought of, Jordy Visser talks about it, a sense of childish curiosity, but also fosters critical thinking, right?
Yeah. No, it is. I mean, another phrase we use, creative destruction. Like, creative destruction is like a concept we learn in business school that you're supposed to embrace. And many people, most people don't start businesses. And so I guess you can argue that most people don't recognize that or intuit it. But no, I think that's the hardest part for most people. Luckily, I was very young and impressionable and somewhat radicalized by the great financial crisis when I found Bitcoin. So I was almost immediately receptive to it. But most people have a very hard time admitting that they were duped by the authority figures in their lives in many different contexts and aspects. And it's everybody likes to think that they are standing on solid ground and have the ability to perceive the world in reality in a way that gives them some degree of certainty. And once you find Bitcoin and begin recognizing everywhere throughout the system where things are corrupted and you've been lied to, it's hard to hold your hand up and say, yeah, I've been duped for decades. To your point, like, humility is the most critical attribute to have when sitting down and looking at Bitcoin.
I think we need more of it.
Yeah, certainly do.
I think society is going to get its dose of it in short order. So, but hopefully it's an easier pill to swallow than it could be, because it could.
And the quicker you get to that point, the better off your life's going to be in the long run. So anybody out there is skeptical and thinking that we're completely insane talking about not only Bitcoin, but the integration of Bitcoin into bond issuance, like, maybe just eat a slice of humble pie and recognize. And that's the other thing we were talking about this week on this retreat. It's like, how many times does Bitcoin have to completely prove you wrong for you to reckon, like, we're at 124,000 almost. It's not dead. Yes, had very volatile periods, but it's been up and to the right consistently for 16, almost 17 years now. It's the best performing asset of the last 17 years. And how long is that going to continue to happen before people wake up and say, maybe I was wrong?
It's tough to look in the mirror for a lot of people. And that's part of the humiliation process, right? But a lot of people do not adjust. They adjust when they're told.
Yeah.
So.
This has been awesome, Maryland. Thank you for doing this. I know it's
Thanks, Marty. Sorry, I kind of ramble sometimes, so I get lost in thought, but I think you get the drift of my direction and points of what I'm trying to articulate.
Yeah, for all the government officials listening out there, consider it. We need to accelerate. I know there are many of you out there. There are dozens of you out there that listen to the show. So light a fire under Scott Bessent's ass and the Trump administration. Tell them to focus in on this, because again, like, I think if you're thinking about manufacturing a soft landing that results in as little social turbulence, if you want to minimize social turbulence over the next 5-10 years, you need to create a way to manufacture a soft landing. People access and exposure to the most pristine collateral, the best asset that's ever existed.
Yeah, and it's important that we stop duct taping. And to your point, we actually start providing real solutions for the people, right? And following through.
Yeah.
So start thinking outside the box. And that's one thing we're good as a community, is thinking outside the box.
Creative destruction.
Amen.
The government participating in creative destruction of the monetary and debt system that they've erected.
Now that's an idea.
The only way
out.
Yeah, this is awesome. Where should we send people who are interested to learn more about your thoughts and what you're writing about? See the substance.
I'm pretty active on X, so you can find me there under Maryland Hodl or Maryland or Hodl Maryland, I think is actually the surname. And then there in my bio there'll be a link to my Substack. I pretty much put things out on both platforms, so you just follow me, you'll see the information.
All right, we will link both of those in the show notes. I hope you have a great weekend. Hopefully,
you too, sir.
We can do this at some point in the future as things progress.
Yeah, absolutely. Look forward to it. again, I just want to say thank you for all of your efforts and contributions to the community. You've certainly been instrumental kind of in developing my foundation over the last couple of years as I've really dipped into the space. So,
well, we're all in it together.
Yes,
Thank
sir.
you. Okay.
Through a common bond.
Yes.
Truth.
We're going to win. We're
Yes,
going to win
sir.
as we like to.
Yes, we will.
All right. Peace and love, freaks. Thank you for listening to this episode of TFTC. If you've made it this far, I imagine you got some value out of the episode. If so, please share it far and wide with your friends and family. We're looking to get the word out there. Also, wherever you're listening, whether that's YouTube, Apple, Spotify, make sure you like and subscribe to the show. And if you can leave a rating on the podcasting platforms, that goes a long way. Last but not least, if you want to get these episodes a day early and ad-free, make sure you download the Fountain podcasting app. You can go to fountain.fm to find that. $5 a month gets you every episode a day early, ad-free. Helps the show, gives you incredible value. So please consider subscribing via Fountain as well. Thank you for your time. And until next time.